as you're doing this, you're going to be needing to build this business case because you're going to need internal sign-off and there's going to be obstacles. People, like I mentioned, are going to have that, well, if we do the sustainable thing, it's going to be a lower ROI. Well, this is a myth. These forms can actually outperform other ones, just like I showed on the previous slide. They might say, we have no other options. We'd love to add a 401k option for our employees that has sustainability, but there aren't any. There's plenty of options out there. People just need to look. They might throw the thing out there. This is a very common one. Oh, the fees are going to be higher. You know what? They're not. The fees are comparable. There's actually no material difference. Or you hear the common one of, well, I had a friend who invested in an SRI fund and they lost a ton of money. Well, you know what? No investment is perfect. But I bet you know way more friends who've lost money on any other things and they aren't talking about it, right? Everyone's lost money somewhere in the market. Everyone's made some money in the market. No investment is perfect. But you need to find out that they probably likely lost more money with traditional investments than they have with sustainable investments. So as an organization's looking at it, all the matrix that I've shown right here and in the previous slides demonstrate that investing in sustainability for your business actually can pay off, not only socially, environmentally, but financially as well. So I talked a lot about on the equity side, but let's talk about the debt side. Where do you put your, where do you want to put your debt? Or, again, you're going to run into the same obstacles. Oh, the sustainability thing, it's, be extra work, or it's a fringe movement, or, the people that are lending don't care about this. There's actually a case out there. There's a lot of banks and institutions that are actually offering lower rates and better returns if you meet social and environmental criteria. 80 of the largest banks in the world have now signed on to the Equator Principles, which is an agreement through the International Finance Corporation that's asking businesses, when you are going to make a large infrastructure, loan or seek financing for that, you're going to need to show your social environmental criteria that you're going to do to mitigate risk up front. And then, if they say, well, our lender doesn't care about this, ask them. You may be the first client that's asked for this, and they're willing to make better terms for you. We had a client who was saying, we would love to switch our banking from the big bank that we work with to a credit union or one of these local banks, but we need to get the same rates. And they said, we'd love to have a way where we could get our employees involved, and maybe we could offer them a way that they could get a discounted rate on a Prius or an electric car. And you know what? We just I told them, go talk to one of these banks. You may be the client they've been waiting for. Sure enough, they went, and the person said, oh, thank you. I've been trying to make that business case to my boss. Now I can do that. Now that I have a client come in, yes, we'll give you those rates. Sometimes it's just a matter of asking. So traditional banking, it's how much money can we make as possible. If we have a loan, what's the greatest return we can do it? A sustainable bank, it's let's determine, what are the needs that are out there and how can the financial services meet those needs. So what you realize is that banking is one of the least trusted industries globally in the world. However, people are increasingly looking for ways that they want their money to match their values, and companies are doing the same. You might have a company that's done a whole bunch of stuff in terms of the sustainability area and has taken a lot of actions and put the sustainable procurement policies in place and the travel and the meeting policies, but their money is just still over in a big bank that doesn't care about it. By moving their money that matches their values, they're living it and walking the talk. When we talk about sustainable banking, one of the things is because they're taking a longer term approach, they're also less risky. They, rely more on customer deposits than on, shady things that got us into trouble in the financial crisis. They maintain stronger capital positions, and they typically have lower levels of volatility. So, putting your money into an organization that's a sustainable bank is actually good risk prevention for your own organization. So what should you be looking for in terms of a sustainable bank or in terms of debt? Look for their products. See if you can find if they have discounted interest rates for green loans or mortgages or mutual funds. Do they have an enviro fund on their credit card or no fee to go paperless? How do they, do they provide education to their clients? Are they working to put money back into the community and making contributions in terms of community development? Are they, balancing their portfolios? Is it fossil free? Are they looking for ways to use social environmental screens to reduce risk? These are all things and benefits that, are out there for organizations that are trying to develop procurement policies to put their money in an investment or in a banking situation where they're living their social environmental values and getting those benefits. So from a banking perspective, here's another slide. What again I would say is an incomplete list of things that are out there, but just to give you an idea of, in the banking sector, if you want to, create a policy where you're, putting your sustainable investment in banking into the right place, there's ways to get involved with social impact bonds, green banks, green accounts, clean auto loans, environmental credit cards, community impact compilations. There's a number of these organizations that are out there that are doing this work. You just have to look for it, but you can find the right banking option for your business that can meet some of these things. And if you can't, go to your bank and say, we'd like you to offer these. Here's what the other ones are doing. Could you offer that for us? You'd be surprised how many of them will.